guys, welcome back to the channel. Today we're going to be talking about banking. Banks are punitive toward their customers these days. It's really concerning. But no fear, there's a lot of disruption coming, and we're going to talk about that today. Some banks are better than others, but man, the future is changing in banking. We're going to talk about it today.
Before we move on to examine the banking industry, if you are new to our page, welcome. We cover real estate and stock investing in the greatest game, college football. If these topics are of interest to you, please consider liking the video and subscribing to our page. For our friends and subscribers who are back with us, we thank you and appreciate your support. Realistically, over the last decade or so, the banking industry has increasingly edged toward a more adversarial position with their own customers. Excessive fees, restrictive and non-transparent loan policies have handcuffed many customers. In fact, millions and millions of people remain unbanked, blocked by strong barriers to entry from even participating in the system. Let's consider overdraft fees. Let's check a scenario where you wrote 3 checks in the following order: a retail credit card for $175, a phone bill for $125, and finally your car payment for $600. But a payment you were expecting to cash into your account was delayed, and upon learning of this, you worried that with only $500 in your account, that last check you wrote for $600 would receive an overdraft fee. Not so fast, my friend. The bank would usually cash the $600 check first, considering it your most meaningful action, causing all 3 to receive overdraft fees. In fact, the average American is paying almost $500 a year in banking fees. In my mind, this exhibits that the bank is not a financial partner. They are penalizing customers. Did you see the antics of Bank of America last week? A report we will link to below indicated the company offered data of their customers to authorities seemingly based upon a politically based position. The transfer of what would seemingly be confidential data may itself be illegal. Feel free to bank there if you wish, but you won't see me doing the same. I'll say it, from personal experience, banks are awful and treat their customers in a punitive fashion. I am cheering and investing in the disruption coming from the likes of Square and SoFi. We will look at the current playing field and hear from some experts on where the future banking landscape is going for both current and prospective customers. As it stands, in my view, your retail bank would not be the best option for you to obtain a mortgage, a personal or car loan, or even do your personal banking. Therefore, the retail bank on the corner of 3rd and Main is going away. My eyes had been on this subject for some time, but they were really opened by Cathie of Ark-Invest. Wood and her firm have been longtime backers of Square, which is traded under the symbol SQ on the Nasdaq, and a company most widely known for their Cash App product. But the company is much more than that. In a recent interview, Ms. Wood discusses in detail the landscape ahead for the Arena Square and many others are working to disrupt. Let's take a listen.
We believe that digital wallets like Square's Cash App are going to effectively become bank branches in our pockets and pocketbooks. So a lot of people really can't imagine what that means, and that's because they haven't watched Square evolve its ecosystem. Square started with merchants, usually unbanked or underbanked merchants, and as you know, the point of sale Square reader for credit cards. And because it is able to monitor every transaction every second of the day for these businesses, it's able to offer them other products and services like loans, whether working capital loans or loans for capital expenditures, like the payroll services. Once they get the payroll services, then they have the employees. Then they offer the Cash App where employees can get their paychecks downloaded into them. And there you have now 24/7 monitoring of consumer behavior. Square has more information on merchants and consumers that it serves than banks will ever have on its clients. And the access to these data is instant, as opposed to weeks or months of data lags that the banks have to endure. And so we do believe that the traditional banks are going to be hollowed out. that banking is going to shift into digital wallets.
Recent articles in Investor Place have stated, among other things, quote, as we become an increasingly cashless society, the Cash App is just one catalyst Square will have when the pandemic ends, end quote. While the company's embrace of Bitcoin is a huge benefit, Investor Place further noted, quote, Square already has adapted to a digital environment with Square Online. One attractive feature of this product is that it allows customers to opt for a pay-as-you-go model in which they only pay per transaction fees. It also gives customers tiered premium options, end quote. Square aims to allow you to run your business even when it's not business as usual. And the stock is going, in my opinion, to $300 a share. Just after the new year, famed investor Chamath Palihapitiya of Social Capital announced he is helping to bring public through a SPAC digital banking power SoFi, another fintech company. Currently trading under the symbol IPOE prior to the merger, SoFi has created a welcoming, complete financial platform for the consumer. Palihapitiya, who discusses the company and its move with Scott Wapner on CNBC's Halftime Report, noted how broken the banking system is. Listen up.
SoFi, have you been targeting fintech for a while? How did this come together?
Yeah, a lot of the things that I do is try to look back at some of the best investments we've made, like Amazon and Tesla, and try to find patterns. And in this, what I was trying to do was map those patterns into financial services, just because we're at a point in time where it's clear that the banking infrastructure really isn't meeting the needs of US consumers. And so what I did was just kind of systematically try to figure out what was broken in banking, and then try to figure out which company was best representative of the solution that people wanted, which I can basically tell you is three things. People want low to no fees, they want fair and transparent lending, and they want a full suite of products so that you can basically have a one-stop shop. And SoFi basically was the top of the list when I looked across all the companies on those dimensions.
We've obviously been following SoFi for a long time. It's been a member of CNBC's Disruptor 50 list, so we're very familiar with it. We're familiar, obviously, with Anthony Noto. The idea of this disruptive force, Chamath, in banking post-financial crisis and what people are looking for, that's a big part of the success of SoFi and certainly of your attraction to it.
Yeah, in fact, the way that I think about this is I call this sort of the anatomy of innovation, right? You look under the hood of the best companies and the best CEOs, they do the following things. The first thing is, when you get a good product, you don't sit on your heels. You double down and you invest really aggressively to use technology to drive down the cost. And then what you do is you deliver those savings onto consumers. Then you launch many more products on top of the same platform. And the most important thing you have to do for people is to democratize access to a key resource. That's what Amazon has done. That's what SoFi is doing. Because the problem that banks have right now is after the great financial crisis, what they've done is they make money with hidden fees, with exorbitant fees. They have very restrictive lending practices. Ask anybody who's a middle income person or a minority or a woman. It's incredibly hard to get access to the money you need to fulfill your dreams. And SoFi has fixed all these things, which is why I think it's such an incredible business.
SoFi, which seemed to specialize in restructuring student loans in the beginning, is now an American online personal finance company with a full suite of products available to the consumer, from trading crypto to personal and even home loans, and does so with an advertised one-stop digital platform that partners with the consumer rather than operating from an adversarial position. Complete financial planning, which seems to be huge for the millennials, is another excellent feature. I have been invested in Square for well over a year, and the stock has been a very strong performer. I also use the company's Cash App feature in my rental collection activities, and it works really good, really good. I also took a position in IPOE as it transfers to SoFi. It has also performed well, and I expect strong gains after the merger is completed. Additionally, I recently opened an account with SoFi and made my first Bitcoin purchase on that platform. I consider the banking industry a prime target for massive disruption, and with the possible exception of the power industry, nobody in any arena deserves the coming tumult more. I wanted to bring this to your attention, both from a consumer and potential investor perspective. However, Please be advised that I am not a licensed financial advisor and I'm not recommending any action on your part. I'm just informing you of my thoughts. Please note the landscape of my financial platform is no doubt different than yours, so please do your own due diligence to find out if any of my thoughts and actions might benefit you. But I am very excited to have joined up with Cathie Wood and Chamath Palihapitiya in helping disrupt the banking industry, and I could not be more excited about it. Well, thank you so much for watching, and we'll see you next time.